All right, folks, FOMC Fed Day is here. So, if you have been through any of these events in the past, it's usually divided into two pieces. So, at 2 p.m. Eastern is when they announce the interest rate decision, and that is followed by 2:30 p.m. conference call with J Powell. And I have learned my share of things over the years, over like last 15 years. So what I know in my experience is that the 2 p.m. Interest rate decision, usually there is no surprise because the market is very efficient in gauging what that interest rate decision is going to be. And I made a video recently showing you the CME Fed Watch tool, which I would say is like 99% accurate in predicting that outcome. So let me switch to that tool real quick before I proceed with this video. Okay, I'll link the video below where I had described how to interpret this tool. But basically, it shows dates on the left side, all the FOMC meetings that are lined up into the future, and then it shows you the probabilities of rate cuts or hikes. So right now we are at this 525, 550 Fed funds rate. So anything that has the highest probability falling here means they will maintain those rates. Anything that is above, that's the probability of hiking rates. So you can see that, sorry, this is cut off. It says May 1st, which is today. And it shows you that there's 99.1% chance of the Fed maintaining the current rate. There's only 0.9% chance of a rate hike. So you can see that 1, 2, 3, 4, all the way until almost September, the possibility of a rate cut is pretty low. In September, yeah, it's kind of iffy because it's so far away and it's showing at 51%. But that's what the how you read this tool, and I will link the video below where you can learn how to use this tool properly. So again, so the 2 p.m. interest rate decision is well known ahead of time. So there is usually not much market volatility happening during that time, although there you will see wild price movements, but it's hard to make trading decisions based on those movements, is what I'm trying to say. Okay, now for the fun part. So let's look at some charts. So first, this is a 5-minute daily chart of Dow futures. And at 2 p.m., when he maintained the current rate, we saw this massive spike. You can't go into this meeting expecting anything because the volatility is out of control. But when I saw this spike, I mean, Dow Jones spiked up 500 points. And I was sitting there looking at these charts. I was like, what in the world is going on? But that's how these meetings are. I mean, you never know what to expect. So I was looking at the chart. I was like, okay, the interest rate decision was already known. What caused this spike? And then you can watch, CNBC media, whatever, they will try to retrofit explanation into what's happening or why it's happening. So they were saying that because he said that he didn't mention any kind of rate hikes, forget about rate cuts, rate hikes, that's why the markets are loving it, and that's it, and this is great, everything, it's all good news. But at that point on our Discord, I made a post that I've been through many of these meetings, and unless the Powell Conference is over, we don't know how the markets will end up. So markets can go from 500 points up, 500 points down in the same day. I've seen those price movements in the past. And then lo and behold, look what's happening. This is the 5-minute chart, and we pretty much ended, I wouldn't say flat. I mean, Dow is still up 100 points. Nasdaq is down. Nasdaq is negative. Nasdaq had gone up quite a bit too. So if you look at NASDAQ, we actually ended up closing 93 points below where we started. That's the funny thing about these meetings, that you cannot trade until the Fed conference, the Powell conference, is over. And the reason for that is the markets, the stock market is a future discounting mechanism. So in the conference, they are looking for signs of what his next steps are. That's why the major price move happens after the conference is over. It's not at the 2 p.m. interest rate decision, because that is well known ahead of time. So on SPY, if you look at 512 is that level which I'm showing you. Unless SPY takes out that 512 level, I wouldn't rely on this relief rally, because markets usually don't go up and down in a straight line. And so when markets drop, you will always see a relief rally. Same thing happens when markets go up in a straight line, you will see pullbacks. So in this case, we are still trying to figure out if this is a relief rally or has the trend actually changed and we are going up from here. But if you want to ignore all indicators, if you want to just use price action and support and resistance levels to figure out if this is a relief rally or is it a trend change, then watch for that 512 level.